Hello everyone, welcome you back to my Finance Chapel YouTube channel. Today I am coming up with very interesting topic because many people are asking me today. New information is passing on about guaranteed return plans, how it works, and is it giving any benefit or not? Okay. Do you think that your FD is safe? Do you think that your entire money, whatever you have kept, you can use whenever you require? Exactly no. If you know that, maybe if you have kept a lot of your money in EFT, especially the NRIs and the people who are working in MNCs, then this is a news for you. And before I sharing the news, please click the like button and subscribe button and share it to maximum number of people so that you will not miss such important information in future. It will take hardly one click. You are not losing anything from your pocket, but definitely it will give me more motivation to do such videos, and definitely it will help many more people to reach out. Thank you so much. Okay, now we will come back to the topic, that is FD versus guaranteed return plans. Okay, now here I'm discussing about the very conservative people who are keeping their money in EFD. What will be the alternative and what are the positives and what are the negatives? Okay, if you are keeping, you just imagine there are a lot of people who kept money in FD, that is, imagine 1 crore rupees. Now you have invested your 1 crore in FD. What is the maximum guarantee which you have in EFD? That is hardly 5 lakh rupees. As per DICGC rule, as per DICGC rule, the principal and the interest amount, whichever you have invested, maximum 5 lakh rupees is guaranteed. If the bank gone bankrupt, then you will not get your any other money like on and above 5 lakh rupees. Per person, per account, that is maximum 5 lakh rupees. And what is the return? What is the interest which you are getting there? From since 1990 to till date, if you are checking, which has started from 14% rate of return, now today it has come down to 6%, 6.5%. Maximum for senior citizen, it is 7.5%. That means the interest rate has declined. And what will be the future? We doesn't even know. In many countries, the interest rate is, it has zero. It is sometimes, even if you want to keep your money, you have to pay money for the banks, right? So what is the option? So even in India, it may be in future, in after 10, 20 years, maybe your returns is just 2% or 1%. That means it is decreasing. Now, is there any guarantee for death cover? If the person has kept 1 crore rupees and the death happens and the nominee will get only 1 crore plus the interest rate, whatever they are getting. That's it. There is no additional death cover. Then when it comes to taxation, if you have kept 1 crore rupees, means almost you are coming under 30% tax slab. And if you are coming under 30% tax slab, even though if you are getting at 6% rate of return, 6 lakh rupees, out of that 6 lakh rupees, that 30% you have to pay tax to the government. And what about inflation? Every year, the value of the goods are increasing. What about your EFD? You are withdrawing. If you withdraw that interest, maybe this year you want 6 lakh rupees, next year you may require 7 lakh rupees, and next to next year 8 lakh rupees. But next year maybe your money is 6 lakh rupees. This year maybe 6 lakh rupees interest you are getting. Next year maybe you are getting only 5.5 lakh rupees. Next to next year maybe 5 lakh rupees. That means the value of your money is coming down because of inflation. So it is your FD interest is not beating the inflation. Okay. Now next comes, what are the other alternative options? You may ask me, Maria, tell me, like, if I don't want to keep my money in EFD, where should I keep? So there is a formula. Like when I do financial planning, I always suggest people, first you have to take term, health, accidental, vehicle, and if you have your own home, like you have to take home loan and critical illness insurances. These are the must insurance. Once you have all these things, like, then you are clear that, okay, I need not to worry. Then you have to worry for the job loss or business loss. If you are working in any MNC companies and if you are a business person, then definitely there may be a fall in future. So at that time, what you have to do, like maybe 3 to 6 months or maybe maximum 1 year money which you have to keep, 1 year expenses, monthly expenses, you have to keep it in FD or like savings account or a liquid funds where you can withdraw that money at any time. For example, if your monthly expenses is 1 lakh rupees, maybe a maximum 10 lakh or 12 lakh rupees or 6 to 10 lakh rupees, you can keep it in FDs. Okay, then what? Then you should have something guaranteed, maybe for your children's education, or maybe for some buying a car, or like a house, or like maybe if it is a long-term goal, maybe you should have something in guaranteed, and you know that whatever happens, like I have some money in my kitty that it will take care. And after that, maybe you can invest your money in growth funds, where maybe mutual funds, stocks, or like cryptos, where you have a knowledge. If you don't have knowledge, please don't do that. You learn and then invest. You have to invest minimum 10% every month on your self education. That is very much important. And whatever the return which you are getting from your self education, no one can beat it. Okay, the returns, no one can beat it. So that's the reason you please have what you can say that please have please keep 10% for your self education. Okay, now I will come to a point, where can I invest? Can I invest in gold? Of course you can invest in gold, but you cannot invest 1 crore rupees in gold. Tomorrow the theft can happen. Maybe you have kept your gold in banks, there is a flood and there is a bank robbery, then definitely you are not going to get your gold back. So always in digital form is good, but even if you see the rate of return, it is hardly 7 to 8% return which gold has delivered so far. Then comes to real estate. Now, can I invest in real estate? Of course, you can invest in real estate. The same 1 crore rupees you can invest in real estate. But what is the return you are going to get? For 1 crore, if you do a simple math, then maybe like in Bangalore, maybe if you 1 crore, you will get 2 BHK. And for that 2 BHK, you can get maximum 25% rent, 25,000 rent per month. 25,000 into 12 is a 3 lakh rupees. And in that 3 lakh rupees, you have to pay maintenance. You have to do a painting. Then maybe you have to once a year, your tenant is vacating, then there may be a lot of repairs will come. Then you have to pay the property tax. You have to pay other bills, that these and all. You have to do some modification, or maybe furnitures and all you have to keep. It will take some money from your pocket, and definitely that will be hardly 2.5 lakh rupees into 12. That is sorry, total it will be 2.5 lakh rupees. That means it is 2.5% for your investment. It is too less. Okay, and that too, even if you have taken a loan and you have invested on the properties, then again you are paying interest every month. Now we'll come to other options. Mutual fund stocks are the best, but stocks, you should have a lot of knowledge about that. You have to understand each and every concept of stock market, and then because there is a lot of people who are losing out their money for with some silly mistakes. Okay, we will leave that, because that is for the wealthy people, and those who have knowledge only they can manage it. Now, where you can invest in SIP, systematic investment plan, and you can invest every month, and you can make sure that the corpus you can build. Now, what if I say, if there is an insurance plan where you can invest in that insurance plan and reinvest that money, guaranteed return into SIP, and you will get a double benefit. Because for the conservative people, maybe they don't want to take too much of risk, like stock market and cryptos. They don't want to be in FDs anyway. They are not going to get maximum returns. Then what is the best option which can work out? So in insurance, there are guaranteed return plans. Now, what you have to do? Imagine you have 1 crore rupees, and instead of keeping entire 1 crore, then maybe every year you can transfer from your FDs to the what you can say that guaranteed return plans, 10 lakh rupees. Now, when you invest 10 lakh rupees for maybe next 12 years, and in that next 12 years, nowadays different companies come up with the different guaranteed return plans. So just imagine, like maybe you are getting 30 to 40% return immediately. That means you have invested 10 lakh rupees, and after a month, like not even after a month, by the way, like after the policy's issuance, within a week, you will get 3 to 4 lakh. Again, it depends upon your age. Okay, so you just imagine like you got 3% rate of return. Sorry, 30% rate of return, that is 3 lakh rupees. What you can do with that? You can reinvest immediately that into SIP, where you are maybe you have taken 45-year term, but in SIP you have just invested 20 years and you just left it. The returns which you are getting guaranteed, and you are reinvesting that return in mutual fund for some period, and here every year you are going to get the same return for next 40 or 45 year, whatever the term you have taken. So now what is the comparison between FD and here? First thing, in FD the interest rate is declining. Here the interest rate or whatever the returns which you are getting every month, it will be same for maybe next 20 years, 30 years. Of course, you cannot beat the inflation later. That is the reason I gave the second alternative option, where you can reinvest your money in SIP. Now, the second important thing, there you will not get any death cover. But here, if the person has invested his money for next 2 years and the third year death occurs, then automatically nominee will get 10 to 11 times of the investment money every month what he is investing. Even though he has invested 20 lakh rupees, the nominee will get 1.1 CR. Next, if there is any accidental death, then again additional maybe 50% nominee is getting. Not only that, the policy will continue. They have given different options there to get a continuity benefit. If you have opted for continuity benefit, what you can do is, even if in your absence, the nominee will get death sum insured. So far, how many years you have invested, that returns you already got it. Along with that, additional accidental benefit, 50% accidental benefit. Along with that, the policy will continue. The nominee need not to pay any additional premium. Along with that, that maturity amount and continue every year, the continuous whatever 30% or 40% which you are getting, you will get continuously. And what about taxes? If you have invested till 5 lakh rupees, then it is non-taxable. That means while you paying, you need not to pay the tax. While you are getting, you need not to pay the taxes as well. So there is a tax benefit, there is death cover, guaranteed return, and the continuity benefit. Whereas in EFD, the interest rate is declining, there is no death cover, and there is no continuity benefit. Once the person died, they have to just withdraw that money. And here, when you reinvest that money in SIP, definitely your money will grow and get a power of compounding, and you can retire with huge corpus. This is only for the conservative investors, where they have kept the money in FD, where you are transferring that FD money to guaranteed return plans and reinvesting in SIP, then definitely you will rock. So that's it from my side, and this is a video many people ask, so that's the reason which I have done. It is just a comparison for FD and insurance guaranteed return plans, not a endowment plans. Okay, so that's it from my side. We will see you. Please let me know like what more you wanted to know and what are the different topics which I have to cover. Please comment in the please write it in the comment section, and please please like and subscribe, as well as share it to maximum number of people, so that like you there are a lot of people can become financially independent. Bye bye.